Welcome to another episode of Cycles TV. Yes, what an event! What an event! I hope all of you returned safe from New York and the conference we had. What an experience. I was so happy to meet a lot of you out there. So at the end, now we are back at our desk in front of our screens and I hope to see you here again on the show. It was a fabulous event. So everyone who was there will know about this. And yes, this is it. So this will now be the single point of truth for the New York conference. I received this reward here for all the cycles work. So yes, it will stay somewhere here on my desk and everyone who was part of the event knows what this means for you. And thank you. You at least give me all the energy to do what we're doing here. So right away, back to business as usual. Today, let's have a review on the Apple stock. So that's what I want to review today because I've seen some interesting cycle situations in the Apple stock. And I mean, said that upfront, normally, I would not recommend to pay too much attention to individual stocks or analysis on individual companies, as there's a lot of noise involved in individual stocks, and therefore cycle analysis is not the best doing on individual assets. However, if you use companies or stocks where a lot of attention, a lot of global volume is bundled, so like the big ones like Apple, Nvidia, or others which act as a kind of proxy for huge sector, then it makes sense. So therefore, Apple, Nvidia, and some of the big individual companies make sense to run cycle analysis. Otherwise, be careful as cycles are more clearly visible in the larger indices or even larger asset classes. That said upfront. Second, we are here for time-based cycle analysis. So what we're doing here is a time-based projection. We try to detect dominant cycles in price series, financial markets, for the purpose of education, right? So we want to learn how cycle analysis works. And I mean, it's the most interesting way to use a live real data set. That's why we use the price-based assets, nothing else, no recommendation. Trading is a complete different discipline. So this is just time-based cycle analysis. All right, so let's jump into our tool set. In order to do that, I will now open also our new launched cycle scanning screen, which is available now for all members, which allows you to ramp up your own watch list. This is just a watch list I'm following, and then you will see all our individual scores here, which give you a quick view on where some cycle alignments take place. Yeah, and if we just scroll down to the stock section, we can here identify that in Apple there's an interesting cycles alignment taking place just right now. That's why it has a score of 7, 3 dominant cycles currently bottoming. And you see the length here of this 3 cycles. That's why Apple seems to be interesting. We have 3 dominant cycles at a bottoming state. So that's, I think, quite interesting. I mean, we are all waiting for another down move maybe to act. But in Apple, we have now 3 dominant cycles in a bottoming situation. That's why I want to jump into that specific setup. So here we are now with the Apple analysis just right away. We see those 2 cycles here pre-selected from that analysis, which build up the initial analysis. I mean, if we go back to the screen, we have 148, 34551. So the 147 in that case here could be added to the analysis too. So these are the 3 cycles, 51, 147, 345, which currently form a cycle alignment bottom here on that screen. So that's the Yeah, that's the very short story, yeah, where the cycle filtering and scanning algorithm gives us a jump start right onto the screen where we want to be. But I mean, we will now pay a little bit more attention, and I will guide you through the reasoning why these 3 cycles seems to be interesting. Yeah, so let's do our basic stuff and let's evaluate why those 3 cycles seems to be important here. So first, let's clean up a little bit the chart first. Let's have a picture, or let's have a view at the spectrum here at the bottom, which is our basic work we are viewing from a cycle analyst point of view. So the longest peak here, or the longest cycle, has a peak at 345 days. So it would qualify for a cycle in regards to amplitude, to the left, to the right, quite good separation on that chart here. We see that also other metrics are quite well. I will now also bring in our new stability scoring, that we also have a view about different measures here, where we can see here the 3, 4, 5 day cycle qualifies from a ranking point of view. So that's the shape in the spectrum, qualifies as a dominant cycle. In regards to stability, it has a high stability score, which means from the variability of that cycle over time. So that's the time component of that cycle. So how stable is that cycle over time, not just at this given point in time, now where we're running the analysis. We also want to understand if that cycle with that length and phase and amplitude has been stable also in the past, not just now. And this is what the stability score tells us. We can even bring in the stability score from that perspective here down below, and you see if we have a good fit between the blue line, which is the filtered price component here of the price series, and high correlation with the theoretical sine wave shaped cycle of the length of 3, 4, 5 days with that phase. We see that over the iterations 1, 2, 3, 4 iterations of that cycle, almost all iterations on that analysis here have a high correlation. That's what the stability shows us here. The valid cycle, the variability of that cycle over time, yeah, which is not the information we have from the basic spectrum. So that's why this is the longest cycle. We will start here. So let's take out the stability scoring here. So you see also from a quick visual check, that's also a method I often tell you here. So just picking the major tops and bottoms here in that area. Okay, there we have an issue here. Just connecting the major tops and bottoms here of that chart seem to quite nicely align with that long-term cycle. Now, coming to the shorter-term cycles, which the most prominent one from the ranking score is the one for 7 days, which can be seen here, 147 in the spectrum, which also becomes quite clear. So from an amplitude, yeah, it's the second highest, but it also has the good separation to the left and to the right. So we have a sharp peak here. And in regards to the other features, we see also not as good as this one, but a stability scoring above 0.5, yeah, which qualifies as a valid stable. Let's also have a quick view what we mean by stability. Here we can even zoom in. So we see the stability score of the 147-day cycle here. The red one is just a theoretical perfect sine wave, and the light blue, as always, is the filtered price series with that specific length. So we see here not as perfect, but the rhythm is clearly seen in the price series. So the stability in regards when we have the bottoms in the light blue and the red are quite in alignment. I mean, here you see the variability. The theoretical bottom should be here, but the real bottom has been here. So also then here to the right, but you see in terms of length, yeah, the length seems to be quite stable. So we have quite some variation, but that's always the case in reality. And overall, it is still very stable over the iteration of 1, 2, 3, 4, 5, 6, 7, 8 iterations. With that stability is quite useful. And you can also align the shorter rhythm of that series, also syncs to that length. All right. So 147, the second interesting cycle then, and then we had the cycle of 51 days. 51 days was also identified by that scanning here in that series. So 51. Let's get back here. So 51 can be seen here. We also add that cycle. It's not selected from a ranking perspective. So here we have some kind of now interesting discussion which we need to take. So 51 days is a quite short cycle. I think it's this one here in the spectrum. Yeah, we see it here in the lower end. You could also argue why not use 80. So, but 51 is at least, it stands out in the shorter term area. Yeah? So it seems to peak out a very sharp peak here with good separation to the left and to the right, but would not qualify from the ranking here. So just from the spectrum, we would not use that cycle. But from a stability point of view, so that cycle seems to have a very high stable rhythm over time, not just today, also over the whole period of that analysis. So therefore, let's bring this in via our stability scoring just at the bottom. Yeah, so this is just this separation of the 51-day cycle here at the bottom. And you see, I mean, it's not the perfect alignment here. That's why the stability score is not the highest. But in terms of blue is the real rhythm of that price series for that given length. Yeah, it's topping here, it's bottoming here, it's topping here. So you see the rhythm of that cycle is quite in sync with the price series. Not perfect, but as said, it just qualifies as a stable cycle moving back here. So it goes out of sync, goes in sync. Yeah? So you see, even going back into the past, it has been quite perfectly in sync starting in 2021. We then have periods when the cycle is completely out of sync, here 2022, but it then resynced already 2023, 2023, 24, and even 25. You see it's even resyncing more, and the amplitude is even higher in recent times than in the past. So this is an indication that this cycle recently, so end of 2024, yeah? So here we're talking about end of 2024, you see that the real amplitude of this cycle was even higher than the average amplitude of that cycle, which means it seems to have become more important during the past year, this shorter term cycle. And from a timing perspective, it's quite spot on over the past 1.5 years. So that's why this shorter term cycle is, from the perspective of stability, very important. So that rhythm has been there with a very low variability over the past 2 to 3 years. So, and we cannot detect this from the spectrum on its own, right? So that's why the combination of spectrum analysis, so the best possible performance on detecting cycles in a given data set, that's what the spectrum is doing. And second, the stability gives us indication how important that cycle was over time in the past. And if both match, or if both have a high scoring, so ranking and stability, then these cycles qualify for possible projection. That's why we should use those 3 cycles. We could now discuss what is about the cycle with the length of 125 here, right? Because it also has a high stability score, or a stability score which is quite valid for projection. And second is in the ranking here. So 1, 2, 4 is seen here, this peak here from the spectrum, right? Let's discuss this in a moment. But for now, and that's why I think the filtering algorithm helps us already a lot from that screen here, is doing all the heavy lifting for us. So even the procedure I just explained, analyzing the spectrum, checking the spectrum for the peaks, evaluating if that cycle qualifies from a spectrum point of view, ranking, and then also the stability over time. Has that cycle been stable over time? Second verification takes 10 to 15 minutes. If you would do this manually with the experience you would have. This is now really speeded up by that filtering mechanism based on your analysis, which brings you right to that analysis as seen here with just one click. So that's our starting point here. And I mean, by the way, the main point I want to make is here, before we discuss the 125 here, we are at a current alignment of those 3 cycles. So all those 3 cycles, which we just explained why we should use or could use those cycles, indicate a possible bottoming window. So let's go through them step by step. Here, the 3, 4, 5 on its own, currently running into the bottoming area. The 147 is coming out of the bottoming right now. And the 51-day cycle also currently bottoming. So right, you see all 3 cycles are currently in a bottoming condition. And that's where we are looking for cycles within cycles. We never just are looking for one specific cycle. This is a cycles within cycles alignment, right? So therefore, 51, 147, 3, 4, 5. Here we have then the longer term picture. Putting this into perspective with some technical analysis, you know, I'm always in favor of the cyclic RSI, putting that also on our screen here. We see that this bottoming time window is currently arriving in a condition where also a technical oversold condition could possibly trigger now a buy signal. So we have 2 valid signals here given. One is the time-based indication on those 3 cycles, indicating at least an upswing. Second is that the technical condition based on price, and this is here based on price. You know that technical analysis is mainly based on price, not on time, indicating the oversold possible signal here, right? So that's the interesting part why I think it makes sense to highlight that analysis just right away today. Last but not least, let's discuss the 125 cycle here for a moment. I need to reset. And because I said 125 was not highlighted here. So let's have a look at the 125 cycle. So the reason for that is that this cycle, and I just want to explain it, why it has not been pre-selected here from the filtering, right? You don't find 125 in that filtering here. And the explanation is that this cycle is currently not in a bottoming phase and is also not in a topping phase. So this is a kind of neutral cycle. This is not a cycle which adds up to the cycles within cycles configuration I've just shown you with the other 3 cycles. The other 3 cycles have a real cycles within cycles alignment at their bottoming phase just now. This cycle is just in between. It's just in its upswing. It has not arrived the topping condition and it has already left the bottoming condition. That is the only reason why it was not pre-selected. So taking this into account, so let's redo the analysis 147, 345, 51. So this is the main analysis of the cycles which are currently in a cycles within cycles alignment bottoming condition. If you now add the 125, you see that, and that's then the next important point in time. So it does support a possible upswing, but maybe not as long as expected by those 3 cycles. So it does not alter the outcome of the previous analysis. Let me maybe try to explain it, because that's now important stuff. So first, we are looking for conditions where we have cycles within cycles alignment, right? So important dominant cycles which are either topping or either bottoming, because these are the windows in time, windows of opportunity, where we should dive into technical analysis and all the other stuff everyone needs to do before taking an investment decision. But however, those are the best timing windows to do that kind of work. If then, in addition, other cycles are also active, for sure, could be the case. Other technical conditions are also there, which should need to be taken into account. We need to do this afterwards. So first, let's look for cycles within cycles alignment, then add technical analysis, check for other cycles which might be either running in the current upward phase or downward swing, which could then negate something, right? So back to the cycle analysis screen. The only using the 3 cycles which are currently bottoming would maybe indicate for a longer upswing into September. If we now also add the 125 cycle, which is valid here from ranking and stability point of view, we see that the upswing here still valid. So the upswing just might have started, but we should not look further into the future than 20 July or let's say end of July. So this analysis we're doing here right now is only valid for the next 4 weeks. Let's say 4 weeks. That's it. So never take that composite cycle, which you could plot into the future even longer. Never use this beyond the next important time on that composite. So, and you can fine tune that composite if then you activate the other cycles which are either currently in their upswing or in the downswing. But these are all cycles. If you look at the spectrum, there are not any additional cycles you should use on that analysis anyhow. So from stability point of view and from a ranking point of view, there are not more cycles to be used. And the 51 is just from the ranking point of view. Right? So that's it. That's the perspective on Apple. So I think it's an interesting timing window the cycles tell us today. As said, this is no recommendation at all. Everyone needs to do her own due diligence, whatever risk management, technical analysis, and decision management you do, which is beyond the scope of this channel here. Okay, so we're live today, so I see your comments rushing in. Let's pay some attention to your comments. And I see 2 topics. So this is now why I'm here live, and I like interacting with you, even though we might now get into technical topics, but that's why I'm here. That's why we are running this once a week. Smiles are good. Lars, when I click the 3 dots on the far right for the stability scoring, it does not seem functional in my Pro version. Any suggestions? Let's talk about this. So first, the stability scoring has now been rolled out to everyone. So we want to make sure that this stability scoring, which is a very important improvement for the whole cycle analysis community, is available to everyone. So it's not limited to any specific membership level. that said first. So now let's rule out the technical issues. The 3 dots on the far right, I assume you are talking about those 3 dots here, which I'm currently highlighting. And it depends maybe if you use a Macintosh, a Mac, or an iPad or a Windows PC, because you must activate it via a right click on a Windows PC. It does not work with a left mouse button click. Maybe that's the usage here. So if you just click it with the left mouse button, it will activate or deactivate the cycle on the composite. So maybe you can also try this. If you mean that by it is not working, that's by design. So a left mouse click will only activate or deactivate that cycle. If you want to see the window, you need to do a right mouse click. So what I'm trying here. So hover over the 3 dots and then do a click with your right mouse. I hope that should work. You see it? You have it. So, but I mean, I think that might be important for a lot of other colleagues out there. Right mouse click. Okay, that was a quick one. Andrea, I hope maybe that's the same issue you had. So please try a right mouse click. So it only works first. Do a right mouse click. Then hover over info box and then left click to activate the info tab. So try this first. So smiles are good. Thanks for seeing that. So Bruno, good to see you here on the live stream. It was a pleasure to meet you in New York. So, your questions on 147. I know the last 2 cycles had a left translation following right translation. Same on the 3, 4, 5. Implications. Let's have a joint view on that. Let's clean up my screen a little bit first. So let's talk about the 147. That's also an info box on the 147. Okay, yeah, I mean, you can spot those transitions. So here we had the we had right translations, so that's what you're meaning here. So the blue one is more to the right from the theoretical cycle. So initially that cycle had a right translation, and now since this bottom and this top we have a left translation. That's right, good observation. You also mean same for the 3, 4, 5. That's hard to spot. We have some translations, but I think for that longer term cycle, I think here it's not. Here we have a right translation, you're right. But for that one, I would count it quite on. So at least previously we had a right translation, but it's a very small one. Let's more talk that on the 147. There I would completely agree. So what are the implications? That's a very valid question. So if I mean, it's hard to project this kind of translation into the future. So maybe the question is will the left translation, which we currently had from the previous bottoming and top, here also the current bottom coming, which, I mean, the implication would be, but there's a lot of if, yeah, in that sentence now, that if that cycle stays in that stability situation, the possible topping should now then also arrive a little bit more early instead of August, but that's the single cycle, maybe in July. Bringing this into context of all cycles, this is, I think, what I mentioned before. The combination of all cycles runs until July 20th. If we have more a left translation of the 147, that top could be expected even more early, mid-July. So the next upswing length could also arrive more early, mid-July. Bruno, I think that would be, and by the way, I've not seen that specific translation or right translation. I've not found that, so thanks for mentioning that. So another implication, thanks for pointing that out, could be that this top here, due to the 147 or current left translation, might arrive a little bit more early. So from now, maybe for the next 2 to 3 weeks, that analysis favors a possible bottom in Apple, but the left translation, as mentioned, could give us a more early top. And we don't know if this will become an interrupt top or just a small pause here, but that's up for analysis. Andrea, nice to see. Yes, I fixed mine. That's also good to see. Yeah, now we get specific here. Smile Cycle. Why does my cycle analysis show 146 and not 147? I don't know. Where should I know? I don't know what you're doing. But long story short, you need to cross-validate if you have the exact same in-sample time period and the same settings in your scanner. But my short answer is, Smiles are good, don't worry. 146, 147 is anyhow the same. I mean, more important would be the phase. I would assume you would have the same phase. And it could only be the reason due to some different settings in your configuration, like the starting point, the end point of your analysis, or other configurations. Otherwise, you would see exactly the same picture. Bruno, thanks for mentioning that. Risk of left translation is obviously Mirsch. Okay, I mean, that's something in addition to mention. A good point. Yes, Andrea, and I think this is also your answer, is if you use a little different in-sample analysis, you get similar cycles, and that's, by the way, why Hurst called it just the nominal cycle theory. It does not matter. So the real cycle is always something different. But if it's 147, 146, or 120 instead of 125, it does not really matter if you have the phase and the dominant phasing correct of those cycles. Yeah, and I think you answered it. So that's, what did I use? I used 1000 bars in the historical data set setting. 850 gives you similar cycles with the similar situation, I would assume. All right, what's the time? Yeah, we are running for half an hour, so thank you. What was quite interactive, some technical questions, some discussions on left and right translation, which would give even room for a full episode, Bruno. Maybe thanks for raising that on left and right translation. Otherwise, do your analysis on Apple. I just found it quite interesting for my own watching this configuration happening in front of our perspective. Otherwise, I would like to see you again next week, same time, same place, right? So subscribe, tell your friends, invite your friends, share the channel, and then we can meet again next week, same time, same place. See you.